The broadcast is now starting. All attendees are in listen-only mode.
All right, everyone. Welcome to the weekly webinar. This is Neil Green speaking with you here, just like every Wednesday. And as you probably know, I see some old names and some new names as well. So just to let you know, every Wednesday at the same time, which is at 3 o'clock p.m. GMT time, which is now, I've been doing this and will do these webinars for you guys once a week, talking about the events that are taking place at the same week in order to give you some information about what's going on in the market these days. And of course, for you as traders, information always help us. I'll try to clarify the market situation for you. And so, as I said, my name is Neil Green, and welcome back. Thank you for joining us. Just want to do a technical check before I start. You have a chat window. By the way, if you have any questions during the webinar, anything you would like me to clarify, of course, I'm going to leave some time for Q&A sessions. All right, Q&A session. I'm sorry, questions and answers at the end of the webinar. If there's any question you have in between, of course, you're more than welcome to write on my chat window, and I'll try to answer your questions in between. Today we're going to talk about some stocks that just reported at the end of the earnings season about oil. A lot of things going on right now with oil prices and with the stocks after a great earnings season that we're having so far from the beginning of the year, the first earnings season of 2017. Last webinar, or 2 webinars ago, I taught you, last webinar was on the NFP and on the interest rate decision, and I would like to thank you for all the emails that I received. I tried to answer all of them, but trying to get to all the emails and give you some answers. Of course, you always have your account managers you can contact and ask them. Just want to do a technical check, see that you can see my screen and hear my voice. So you have a chat window, just write me down. Everybody can see the screen, supposed to see our homepage, itrader.com, and hopefully hear my voice. So you have a chat window, just write yes or something that I know that you're here with me, so we can start. All right, just want to wait a minute or two for everyone to arrive. So in the meanwhile, let's do a technical check. Everybody can hear my voice, see my screen? Anyone has any technical problem? We all good? All right. Good. So you can see the screen, right? itrader.com, and all right, some new guys are arriving. It's good. I see some familiar names here, so welcome everyone. Hope you had a good week since last Wednesday trading, and let's talk about what's going on in the market. So if you're ready, I'm ready. Let's start with the webinar. Anyone has any technical problem? Everybody can hear me? Guys, I don't want to talk to myself, so let me just know. Everybody sees the screen here? See our homepage? Yes? We good? Okay. You see the chat window? If you have any questions, just write me down during the webinar, okay? All right now. So let's start. Let's talk business. Okay. All right, guys. So as you probably know, the earnings season, this earnings season started at the beginning of January. It's going to end in about a week, or about a week from now, a week and a half from now. And it started with the banks. We talked about it, and then some technology, and let's see what happened in the market. So let's talk about 2 major companies, 2 major stocks that one have reported yesterday and the other one should report tomorrow, which are Disney and Twitter, and then talk about oil. All right, so we're talking about Disney, Twitter, and oil. Let's start. Okay, earnings season is heading into its final stage. All right, 2 webinars ago I taught you how to trade, how to read the information about the stocks. We talked about the PE ratio, if you remember, and some other things, including EPS, earning per share, revenues, capital market, and so on. And we saw on how to combine the technical analysis with some support and resistance, some key levels, combined with the fundamental, looking at the index and so on and so on. So market sentiment is very, very positive. All right. How do we know that? If you take a look at the MetaTrader, all right, just to know that the market right now is going up like crazy. Let's take a look on the indices. For example, Dow Jones. All right, this is a daily chart of the Dow Jones, which means that each candle represents one day. Green means that the Dow Jones is going up, and a red candle means that the Dow Jones is going down. Dow Jones in this case represents the 30 companies with the highest value in the US market. As you can see, it crossed 20,000 right now. It's on 20,000, all right, booming up like crazy since Trump was elected. These are the elections, all right? Talked about tax cuts, we talked about it, and about government spending and so on and so on. Trying to leave everything domestic, all right? Cancel some agreements with other countries in order for everything to be manufactured in the United States. And of course, it affects the market strongly, as you can see. If we take a look on the NASDAQ, represents the 100 stocks with the highest value, or the S&P 500. The US market right now is booming up at the highest point ever, so market sentiment is very, very positive, as you can see. Great time to trade, right? When the market is going up, great time to trade. The fear index, VIX, right? Since 1986, we have the VIX, which is the fear index that gives us some kind of, I would say, some kind of a mirror to the tension that we either have or don't have in the market. So it's trading close to its all-time low. All right, trading to its all-time low. If you want to look at the VIX, this is the VIX. VIX, supposed to be here. Down here, I'm sorry, there you go. You see, traded at 12.7, very, very low. If you look at the history, this is a weekly chart. You see, close to, you see support line here, very low, close to the all-times lowest, 12.7. When the VIX is high, it means there's a lot of tension, which means a lot of uncertainty, like we had a few months ago, a lot of uncertainty in the market, and people don't really know, you don't really sure after analyzing the market whether the market will go your way or not. When the VIX is traded low, which is the lowest point as it is right now, it means not a lot of tension in the market, which means that everything is pretty clear, right? So if the market right now, the market sentiment is great, and the markets are going up and booming up at the highest point ever, we know what are the reasons for that, all right? Trump was elected, tax cuts and government spending. All the big companies I'm going to show you soon are giving out, handing out great reports. Actually, it's a great time to trade in the market, just for you to know. It's the greatest time ever, I think. VIX traded very low, not a lot of tension, not a lot of fear in the market. Everything is pretty, we can expect it, okay? Brand, okay. VIX traded all-time low, markets high. How does that work? VIX is the index of fear, okay? VIX is the index of fear, which means if VIX is trading low, not a lot of fear, not a lot of uncertainty, not a lot of tension, which means the market is pretty clear to the traders. This is why right now the indices at the highest point, everything is going up. All the stocks, all the indices are at the highest point, are going up since in the last 2 or 3 months. And this is why VIX is traded low, all right? VIX is traded low means no fear, no tension. VIX is the index of fear. Answers your question? Okay. Okay, so the fear index VIX trading close to its all-time low. Markets are trading at all-times high. Okay, show you again. If we look at the main indices, instead of trading on one stock, you can trade on the whole index by buying contracts. S&P 500, this is a monthly chart, which means that each candle represents 1 month, February, January, December of 2016, and so on. See, 2,283 all-time highs. NASDAQ, same thing. Dow Jones, NASDAQ, all-times high. Okay? Just for you to know, market is booming up right now, like crazy. So, more than 70%, right now we're at the end of the earnings season. As you probably know, every quarter, every 3 months, all the big companies in the United States are handing out reports. Okay? Why? Because, a huge percentage out of them belongs to us, in our pensions, or if we just buy stocks, go out to the public, because these companies wanted to raise capital, and they must hand out reports because these are public companies. Okay, so when they hand out the reports, okay, it's the end of the earnings season. More than 70% of the S&P 500 companies beat expectations. Okay, just to show you, let's take a look on big companies. Right now, the U.S. market is open. Okay, since 50 minutes ago. Look at Apple, for example. Daily chart of Apple. Look at this. They had a great report, right? The report took place on January 21st, after market, and then February, first day of February, gap up when the market opened, right? And right now, going up like crazy. So Facebook, for example, let's talk about big companies. Boom, everything is booming up. Let's take a look on banks. Citigroup, right? Right now, it got a bit down, but as you can see, the trend is up. Okay, Goldman Sachs, same thing. All right, same correlation. So if you want to take a look at the big ones, you're going to see right now that the market is booming up, and McDonald's, for example, in the last few days is going up. The whole market right now, this is why the VIX is traded very, very low. Not a lot of tension. Market sentiment is great. All the stocks are going up. Indices that represents the stock are up. And let's talk about what happened. Yesterday, Disney has reported. Disney reported its earnings yesterday. The stock is down 0.5% in the pre-market trading. All right, as you probably know, when the market is closed, all the banks and the big corporations can trade between them. They trade between them out of the market, not in the market like us, the traders. They trade, buy and sell stocks between them out of the market, and of course it affects the price of the stock when the US market is open. So it's down 0.5%. What is the reason? Actually, the EPS expected was $1.44 per stock, the earning per share, and it was a bit higher. It was 1.56. But still, looking at the whole report, I just read the report this morning, or the sum of it. The company reported a drop in cable TV revenue. Okay, this is very important when you want to trade on stocks. Don't look only at the revenue or the EPS, which is the same, because if we take the revenue divided by the number of shares that the company has, we get the EPS, earning per share. The whole earnings divided by the number of shares, we get the EPS. And we're not talking about only new businesses or talking about the revenues. We want to take a look at the key numbers. If we talk about Apple, we want to see in the past quarter how many iPhones did they sell, or how many cloud services and products they sold, or music products they sold, compared to the forecast, what the analysts believe that the number will be. Okay, when we talk about Facebook, we talk about new subscribers. So Disney, the company, reported a drop in cable TV revenue. Now, the main challenge, this is like huge percentage out of the revenue. The main challenge for Disney is its cable networks. As you probably know, ESPN and ABC. All right, they belong to Disney. I don't know if you knew. Like a lot of people think that still Coca-Cola and making only Coca-Cola. No, Disney are involved in many things. They have a huge percentage out of the cable TV, ESPN and ABC networks. Now, the shift to live streaming companies like Netflix and Amazon is hurting Disney revenue from cable TV, right? A lot of people today, as you probably know, in Western countries, they have a cable TV, but they have other alternatives, okay? Streaming TV, for example. They pay less, and then they buy a Netflix or Amazon, all right? And then it hurts Disney. So the company reported drop in cable TV revenue, and this is why the stock went down a little bit today. Take a look at Disney, just for you, daily. You see, it went down just a little bit, not a lot, okay? And now it started coming back up. Went down, and now it's coming back up because the report wasn't that bad, okay? Looking at Disney as well, you can see we have a huge uptrend, just like the whole market. So the report was here, didn't affect it strongly, and this is just for you to know what happened yesterday. The trend is still an uptrend. Twitter, okay, Twitter will report on Thursday, which is tomorrow, after market close. Of course, companies always report before the market is open, or after the market is closed, because nobody wants to interfere during market time. The stock is trading around $18 per share, very low. Why is that? Twitter's main challenge is user growth, of course. Okay, they make money out of new subscribers. Okay, they put commercials, and they need more people to be exposed to that. For example, Facebook has 2 billion users, while Twitter has only 310 million. Can Twitter add more users to its platform? And this is the key number that we want to look for tomorrow on the report. So of course we want to take a look, just like I said on Disney, on the revenue and how much money they're making. But you know, the investors, they're trying to take a look ahead on the future. And in order to take a look in the future, we want to understand how many new subscribers does Twitter has, for example. Okay, what do you think affects Twitter mostly lately in the last past 2 months? What do you think affects it? Any guesses? All right. You know Donald Trump, the President of the United States, all right? He was since he was nominated and throughout his campaign, and after he was elected, Donald Trump tweets a lot. He uses Twitter for everything. When he talks about Iran, he tweets, all right? When he talks about Mexico, he tweets. When he talked about tax cuts or government spending, he tweets. He's using Twitter a lot. Right now, Twitter has 310 million, not like Facebook that has 2 billion subscribers, all right? So in this report tomorrow, we want to see, compared to the forecast, whether the fact that Trump is using, for example, Twitter a lot, and other celebs, do we have more subscribers and new user for Twitter? And I think it's more important than looking at the EPS or the revenue for Twitter, because this is looking ahead at the future. Okay, so pay attention to these key numbers before you take the trade. So we talked about Disney yesterday. We talked about Twitter, and let's talk about the oil prices. Okay, oil inventory. Let's take a look, general look on crude oil these days. Okay, this is a daily chart of the crude oil, which means that each candle represents 1 day. Of course, again, the green candle means that the price of the oil is going up, which is great for the oil countries. I'm going to talk in just a second who are the oil countries. Red candles is better for us because we're going to pay less when we put gas in our cars. Okay? Now, right now, it's traded around $51.71 per barrel. Okay, US dollars per barrel. And we had an OPEC meeting. OPEC is an organization that represents the 14 countries that export around 70%, 73% actually, out of the oil export in the world. Okay, most of them are from South America or Arab countries, such as the strongest one is Saudi Arabia, for example. All right, they export 73% out of the oil in the world. All right, the OPEC organization. Now they had a meeting here back in November, at the end of November, and they decided to cut production. The reason was that, as you probably remember, at this time, the talks with Obama and the U.S. decided to cut the sanctions out of Iran, and Iran wanted to go into the competition. They talked with the Saudi Arabians and the other countries to cut production in order for the price of the oil to go up so they can make money as well. All right, so then the prices went up, and right now you see it's around 50. It doesn't go really farther than that. Right now we have down and upside trend. It's not going up or down. It stays between $52 to $54.5 per barrel. And I want to talk about an event that is going to take place actually in 11 minutes from now at 3:30 GMT time. Okay. Now this event represents the weekly U.S. supply change of oil. This is a weekly event. Every event at Wednesday at 3:30 GMT time, PM GMT time, which is 10 minutes from now. The U.S. Okay. This is a great opportunity to trade. The U.S. firms, I'm going to talk about the change in the number of barrels are in the US storage, okay, whether it's higher than expected or lower. As long as oil keeps trading close to $50 per barrel, the event should have a strong impact on the price of the commodity, okay? Back in the days, if we look at it monthly, at 2008, for example, as you can see July here, the oil traded much over $100 per barrel, $130, $140 per barrel. The oil countries made a lot of money, 3 times more than what they're making right now when the price is $50 per barrel, and they didn't really care. So this event didn't, you know, how many barrels are in the US firms, it didn't really affect the market. What happens these days when it's traded around $50 per barrel, as you can see, this event affects strongly the market, okay, because it gives us, you know, the fight between the Americans and the OPEC. The Americans actually, they make oil by themselves with the new technology, so it affects the market strongly. All right. So as long as oil keeps trading close to $50 a barrel, the event should have a strong impact on the price of the commodity. The OPEC cut production move has not yet proven itself. All right. We saw the price went up from let's take it daily. Went up from around $45 per barrel to 50, 52, 53. Okay, we expected to be 70 and 80. So we saw the cut production at the beginning, at the first 2, 3, 4, first week, I would say, oil prices went up, and then it kind of stopped, as you can see. See, each can represent one day. It didn't really affect the market, okay, because of many other reasons that I might talk about next webinar. But the OPEC cut production move has not yet proven itself, as you can see. And this is why this event is very important, because it affects the market strongly because of the low oil prices. All right. Traders can diversify their position using correlation tactics. All right. Correlated assets include the Canadian dollar, the NOK, the Hong Kong dollar, and the ruble currencies, because these countries are huge oil countries. They export a lot of oil. They have a lot of oil. Russia, Canada, and so on. So their currencies are very correlated with oil, which means usually when oil goes up, these currencies are getting stronger as well, and the opposite. Now, things to notice during publications of back to the stocks. All right. First of all, market sentiment, as I showed you. All right, market is booming up. Dow Jones crossed 20,000, all-time highs. Price of the VIX, we saw traded very low, very close to all-time low, which means not a lot of tension. The index of fear is very low. The market is pretty clear to us. Support and resistance per asset. Before you trade on any asset, put some key levels to understand how high or how low the price of the asset might get, in order for you to know what trades to take. And of course, EPS, which is earning per share, and key numbers that is changing between the stocks. Okay, we talked about Disney and the TV cable versus Netflix. Look what happened with Netflix, comparing to Netflix, for example. Netflix stock is going up, which they compete Disney on this level. There you go. Daily chart. Here is the report. Boom, and going up. Okay? Great. So pay attention to this, and of course, good luck. All right, guys, any questions? Anything you would like me to repeat to clarify something you didn't understand? This is the time. Ask me. I'm here for you. By the way, next Wednesday, in order to register to the next webinar, okay, you can find it here on the homepage. Down here, you just click on Save Me a Seat and just register just like you did it now. It's gonna always be for free. Okay. Next webinar is gonna talk about the CPI, US CPI. I'm gonna talk about it next Wednesday. So we here every Wednesday talking about the events of the same week, and you're more than welcome to join us. I would like to thank you very much for participating. I'll be available on my email. You're more than welcome to email me, and I'll try to respond to all your emails during the week. And hopefully see you here next Wednesday and make a lot of money. This is what we're here for, no? All right. Thank you very much for participating, and have a great one. Bye-bye. Thanks.